for business people.
Good morning. You're watching All You Need to Know on Bloomberg Quint, India's first digital live streaming news service. I am Jayesh Khilnani. Alongside me is Agam Vakil to take us through the FNO space. But first, the trade setup. Well, if you look at the US market, it was largely flat to negative, with the Dow Jones declining about 8 odd points. The S&P 500 declined about 0.1%, and the Nasdaq Composite declined 0.3%. Now, this was largely on account of shares of Apple, which declined about 2.5%. Now, all of the Asian markets have come back into trade, and if you look at the Nikkei, that's trading about 20 points higher. The Hang Seng is about 0.1% higher in trade, but you remember that this was trading about 0.8% higher. It has come off the day's high, and the Shanghai market had actually slipped into the negative, trading with a negative bias of about 4 odd points. So what does the SGX Nifty suggest? Well, it's suggesting a mild negative start for the Indian market, trading just about 1 point down. Now, this also has come back, has slipped from the day's high. 15-20 minutes back, it was actually trading about 20 points higher, but it has slipped from the day's high. Now, the other cues that we are picking up from the commodity space, while oil was in focus, it jumped actually 2.5% after the Libya pipeline blast that we saw. Moving on to the gold prices, we have seen gold prices gain for 4 days in a row and almost nudged the 1290 mark now. As far as metals are concerned, no cues coming in from the London Metal Exchange on account of the holiday. But if you look at the Shanghai Futures Exchange, most of these base metals are trading with a positive bias. Now, moving on to the currency space, we saw that the euro and the pound trading largely flat. The euro at about 1.186 and the pound at about 1.33. As far as the Japanese yen is concerned, move on to the rupee. We saw that the rupee actually declined a little bit and closed at about 64.078 for the rupee itself. As far as flows are concerned, once again, this is reflective of the December factor, wherein the FIs actually sold about 44 crores in the cash market. Moving on to the DIs or the domestic institutions, we saw them buying to the tune of more than 554 crores in the cash market itself. Now, the FIs have sold nearly 8,000 crores for the month itself, while the domestic institutions have pumped in more than 8,500 crores for the month of December. Now, as far as the recap of yesterday's trade was concerned, remember that the Nifty actually had a rally in the last 1 hour and managed to close above the 10,500 mark for the first time in history. We saw the Nifty climb about 40 points. The Sensex climbed about 0.2% or 70 odd points. The Nifty Bank did not do really well. It climbed just 0.1% or about 25 odd points. Banks were the real, draggers in the market that we saw. But volatility came back into the market, with the India Wix actually surging about 4 odd percent and climbing back above the 12 mark. Now, as far as individual indices are concerned, we saw that Nifty Realty and the Nifty Pharma Index gained about 1 odd percent. And the Nifty PSU Bank, this is what I was referring to earlier, was the big laggard, which actually declined 0.7%. As far as individual stocks are concerned, how did they contribute to the index itself? Well, Reliance and Bharti Airtel contributed about 12 odd points, while Sun Pharma and Vedanta just about 5 odd points between the two of them. As far as the decliners were concerned, two banking big names over there, no surprises coming in, HDFC Bank and SBI, along with Infosys and HUL. But volatility has come back into the market. So Agam, what are you picking up from the F&O space?
Right, so we have seen expansion in option premiums, Jayesh, and because of that we've seen the VIX move up. But let me start off with the future space. What we're seeing is a little bit of an addition in the Nifty futures. In terms of the Nifty Bank futures, we are seeing unwinding of as much as nearly 3%. Moving on, when it comes to some other variables that we are watching out for, the VIX, as Jayesh mentioned, has gone up by as much as 4%, firmly above the mark of 12. With that, the Nifty put call ratio continues to be at 1.59, but rollovers now standing at around 35%. They've certainly picked up, and we'll be watching out for more cues since we have 2 more sessions to go before expiry. There was one option which was extremely active in yesterday's job trade, and that was a 10,500 put, where we saw more writing. A lot of stocks which moved into the band. So we have HDL and Jet Airways, 3 more stocks which have also come into the F&O band, and they include Jain Irrigation and Reliance Capital. But on the other hand, Fortis Healthcare and Reliance Communication move out of the band. Reliance Communication is one stock we'll be watching out for, considering we have seen so much long build up in this particular counter. And speaking of longs, Cummins India is the other counter that will see a surge, considering we've seen about a 5% increase in open interest, or rather the underlying, and near 10% increase in open interest in today's job trade.
Stock of the day is JSPL. Now, JSPL has completed a 250-ton basic oxygen furnace, that is BOF, for its Odisha steel plant. This marks the completion of all the facilities of 6 MTPA steel plant that we've seen in Odisha. And with this, the company now would be able to completely utilize its 4 MTPA capacity that was installed back in August. It's a mega blast furnace capacity that it will be completely be able to utilize with this. JSPL has partnered with SMS Group for engineering and supply of BOF equipment. Details of the plant, while the 250-ton basic oxygen furnace will produce around 3 million ton of your super high grade steel per annum, and the plant is expected to bring in some cost efficiency for the company, because it will also lead to lower energy consumption by the company. The company commissioned, as I just mentioned, the largest blast furnace of 4 MTPA in August 2017, and the BOF is the last installation that we're looking at in this plant, which has been set up with an investment of around 33,000 crore. And Angul plant is also the largest integrated steel plant in the state of Odisha, according to the company's press release. With that, let's toss it over to Saloni for currency market updates.
Thanks for that, Nikki. So starting off with rupee first, it snapped a 2-day winning streak and ended marginally lower at 64.08 levels against the dollar. The home currency hovered in a narrow range of 9 paise throughout the day in the absence of any fresh triggers in the currencies market overall. Now on the global front, most Asian currencies ended mixed in thin holiday trade, with the Chinese yuan rallying to 3.5-month high before retreating 0.2%. On the flip side though, South Korean won gained the most. It ended higher 0.3% against the dollar. Moving on to the dollar index, it traded in a tight trade against other major currencies as trading volume remained low during thin holiday trade during the Christmas season. Now dollar coming back home, dollar rupee is trading marginally higher at 64.04 levels against the dollar in the non-deliverable forward market, which indicates a higher opening for Indian rupee in today's trade. Moving on to bond market, sovereign bonds erased losses to end little changed after a report said that recapitalization bonds that are to be issued by the government will not be sold in the open market, while consequently we have seen that the yields, 10-year benchmark yields ended steady at 7.27%, while global funds increased their rupee debt holdings for second consecutive session. They infused close to 840 crore according to NSDL data. Having said that, let's shift focus to commodities market. Good morning, Jayesh. How is oil prices trading today? It has actually hovered near 2-year high. So how is it performing out?
Morning, Saloni. So oil prices actually surged more than 2.5% overnight and reached a 2015 high point. What it did was WTI actually overnight touched a high of about 60.01 for a barrel, and Brent prices surged as much as 67.1 for a barrel. Now, what this pipeline blast means is that the Libyan output is now being seen to decline as much as 70,000 barrels per day. So that's the cut that we are expecting. And on the other hand, Saudi Arabia has made a comment in which they see that the oil revenue is likely to jump as much as 80% by 2023. On the other hand, gold prices posted a 1-month high and touched about 1289 for an ounce. COMEX gold actually surged above the 200-day moving average for the second straight day running now. So important hurdle being crossed over there. As far as other base precious metals are concerned, silver futures actually rose on the COMEX, while platinum and palladium climbed on the NYMEX exchange. No cues coming in from the London Metal Exchange as far as base metals is concerned. However, if you look at the Shanghai Futures Exchange, most of these base metals are trading with a positive bias to the tune of about 0.5% each.
Among the stocks that we're tracking today morning is Prestige Estates, where the company said it will acquire 66.66% in its group company Prestige Projects. Now, currently they hold 33.34% in Prestige Projects, and they'll acquire the remaining 66.6% from landowners and investors, and that will be for as much as 324 crores. Now, Prestige Projects owns a land parcel in Bangalore, and Prestige Estates has proposed to develop affordable and mid-income housing project there, and hence the acquisition. The company has said that they will complete acquisition before 31st January 2018, so do keep an eye out on that name. But continuing with the real estate theme itself, you also have DLF, which has informed exchanges that they have concluded the 9,000 crore rental arm stake sale deal with the Singapore-based GIC. Just a deal completion notification coming in. That apart, on the back of fundraising, we're tracking two banks. One is Canara Bank, where the board yesterday in a meeting gave its nod for raising equity capital of up to 3,500 crores via the QIP route. And you also had Punjab and Sindh Bank, where the board approval to raise funds via share issue came in yesterday. More details, of course, will be shared by the bank later. Just a board approval that has come in. That apart, on the back of bulk deals, we're tracking Lokesh Machines, where Sushmita Kacholia, who's the wife of investor Ashish Kacholia, sold 0.8% stake yesterday. Remember, on Friday also she had sold about 0.7% stake in Lokesh Machines. So that's a stock where we could see some negative reaction today. So keep an eye out for some of these names.
The government has collected about 80,808 crore rupees as goods and services tax for the month of November, collected as on December 25th. Now, this has been the lowest GST collection since GST was implemented, after a dip to about 83,000 crore in the month of November. Now, this is the lowest collection so far, and the primary reason for this shortfall in revenue is a massive rate cut announced by the GST Council in its meeting held in Guwahati. So this rate reduction came into effect from November 15, 2017. So this rate reduction does not have a direct, it has a total impact on the collections, considering only the rate reduction came into effect halfway of the month. Now, if we were to analyze the GST collections, the CGST collections are about 13,000 crore as compared to about 18,000 crore collected as SGST revenue. Now, the reason for this is the IGST that was primarily that was initially paid by companies to transfer their own goods from one place to another, is, along with transitional credits, is being utilized to pay CGST liability of these taxpayers, and that is the reason why CGST collections are still lower as compared to SGST collections. However, there's a good news for the government. The total returns filed as on December 25th are about 53 lakh as compared to about 51 lakh filed in November. And the number of composition dealers, number of taxpayers who availed the composition scheme has increased to about 16.6 lakh from 15 lakh a month ago.
We expect a full and financial closure of all the transactions for all the modules that we are running to be completed between January and March 2018, which is the next 3 months. The overall debt for Reliance Communication will be below 6,000 crores, which is a huge reduction. I think the driving force for the banks was A, no write-off, 2, substantial amount of prepayment, 3, practically reducing their exposure in the telecom business to near zero, the wireless business to absolutely zero. So that was the comforting factor, and we aligned all the lenders together to get it done. In the packages that we've got for the wireless business in terms of the monetization, there are a large number of bidders.
The new debt reduction plan announced by Reliance Communication on Tuesday certainly seems to bring immediate relief to banks, although it still remains unclear whether they're just kicking the can down the road or whether this plan will mean actual resolution. Let's start with the near term. In the immediate term, what this plan does is prevent banks from having to convert debt into equity. Remember, in June, they had agreed to strategic debt restructuring in RCOM, which meant that they had to convert 7,100 crore in debt into equity, and they would have held 51% stake in Reliance Communications post that conversion. Now, there were two complications with that plan. One, the conversion price agreed upon was 24 rupees 71 paise, and the stock was trading well below that. So if they had converted at that price, banks would have been sitting on a fairly significant mark-to-market losses. Also, once they had converted, banks would have been responsible for either selling off individual assets or drawing in strategic investors into Reliance Communication. As part of this plan, Anil Ambani said that there will be no debt to equity conversion, so banks are perhaps off the hook immediately. But the second question is, does this prevent Reliance Communication from going into insolvency? Remember, among the insolvency petitions that are pending against Reliance Communication, the most significant one is the one from China Development Bank, which is a large Chinese creditor to Reliance Communication. One person familiar with today's plan told us that as part of this debt reduction plan, the Dhirubhai Ambani Knowledge City special purpose vehicle, which will be set up, a large chunk of that will go to the Chinese lenders. Perhaps then the agreement is that the Chinese lenders will withdraw their insolvency petition. Anil Ambani, when asked the question as to whether this will stave off insolvency pleas, said that it is understood, or it is perhaps expected, that insolvency petitions would be at bay because of this plan, because otherwise, he said, you may as well have gone through the resolution process under the aegis of the NCLT. But until you see China Development Bank actually withdraw the insolvency petition, you can't say that with any clear certainty. The final question, and the most important question perhaps to ask, is why you should believe this resolution plan over the previous resolution plans. Remember, they had a plan to merge with Aircel. They had a plan to sell tower assets to Brookfield. They had a plan also to bring in 33,000 crore through asset monetization. None of those worked out. So will this work out? Well, the only thing we can say is that Anil Ambani did say that he has binding bids on the table for a large number of the assets, and the one person that we spoke to who is familiar with the plan said that Reliance Jio is one of the parties which has submitted binding bids for at least the spectrum and the tower assets. So perhaps this time around they will actually be able to monetize some of those assets, but until March, until you actually see the money come in, you can't say that with any certainty.
Well, on to some more stocks to watch and keep on your radar based on the cash delivery volume as of yesterday. First up, we have Jet Airways. The stock was up more than 8% yesterday and saw delivery buying in excess of 120 crores. The delivery volumes actually doubled at about 15 lakh shares as compared to its 10-day average, and the total volume was up nearly 3 times at 1.5 crore shares versus its 10-day average. The other stock to watch out for, Fortis Healthcare. It was up 5.5% yesterday and saw delivery buying in excess of 100 crores. The delivery volume almost doubled at nearly 68 lakh shares as compared to its 10-day average, and the total volume was up just 40% at about 1.7 crore shares as compared to its 10-day average. Reliance Communications, probably the stock of the day, was up 31% yesterday and saw delivery buying in excess of 140 crores. The delivery volume surged more than 3 times at about 7.2 crore shares as compared to its 10-day average, and the total volume was up more than 3 times at nearly 56 crore shares as compared to its 10-day average.
The first one that we have is Motilal on Sanghi Industry, where the company has initiated a report with a buy rating and a potential target price of 157, which indicates a target price of 157 with a potential upside of nearly 23%. It says that it's a low-cost producer, mainly on the back of the quality limestone, locational advantage, and the strong integration. It says that the main strength of the company lies in the access of the limestone reserves that it has. The margins are also expected to expand in the next over the next 3 years. Diversification in the new markets is expected to bring in scale and margin expansion, and also it says that the company is a strong re-rating candidate, mainly on the back of expected increase in capacity and also the operational efficiency which creep in thereafter. It expects the EBITDA and the PAT CAGR in the next 3 years to be in the range of 33% and 61% respectively, on improving pricing scenario and operating leverage. It says that it expects the ROE also to increase by 11 basis points to 16.8% in FY20, led by the sharp uptick in the profitability. The second that we have in our list is Edelweiss on Kotak Mahindra Bank, where it has upgraded the counter to buy from neutral rating and with a target price of 1,205 per share. It says the upgrade follows the recent interaction that the brokerage had with the management. The confidence is stemming in from the culmination of integration banks because the fear of the merger of ING Vesa Bank was lower than on OPEX as well as asset quality fronts. Also, there was an improved visibility which is seen in this counter, particularly on the transition to steady state returns profile in the near term. Also, the liability franchisee continues to strengthen, which is a key positive for the company. But in terms of risk, continued stress in economy, and thereafter the commercial vehicle and the CE portfolio, which is expected which could moderate the bank growth prospect, is something that the brokerage is a little cautious of on this counter.
2017 has been a dismal year for the consumer durable sector, thanks largely to the twin blows of demonetization and GST. However, there is a silver lining amidst all the gloom. Televisions, especially the big and bright ones, seem to have got the Indian consumer hooked. Strong sales of 4K and OLED flat panel TVs have helped retailers make up for lost demand, with Samsung and LG being the big winners.
What worked for us, the larger TVs coming in, OLEDs, 4Ks. So we saw huge value growth, but the volumes were really lower than last. My value growth is 15%, my volume growth is around 6%. Okay, so 6% more tickets, but 15% higher value.
And TVs aren't alone. India's fascination with smartphones too has helped cover some of the slowdown blues. Electronics chain Chroma saw its volumes grow by 6%, largely due to new launches from OnePlus, Samsung, Xiaomi, and Vivo. But even with the boost from TVs and smartphones, the segment as a whole lagged behind. Retailers and electronics makers hoped for the market to recover during the festive season and lured buyers with easy finance schemes. Yet, despite all their efforts, the sector only managed to clock a single-digit growth this year.
The appliance business was affected somewhat last year because of demonetization, and this year also because of GST. But I think that the growth rates have come down slightly. Appliance industry has been growing around 15% over the last, say, 5 years. So we think around maybe something 11-12% this year.
Demonetization and GST certainly played spoilsport for the consumer durable sector this year. However, televisions and smartphones saved the day. With the new year fast approaching, consumer durable retailers are hopeful that the new year will bring in new fortunes for the home appliances segment. This is Charlene D'Souza for Bloomberg Quint.
Now, there's a lot to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also a few stories that you should consider reading on the website. That's bloombergquint.com. Here they are. SEBI has penalized 63 Moons Technologies, formerly known as Financial Technologies, as it failed to seek prior approval for the name change from stock exchanges. The change in the name was effected last year after Financial Technologies came under the scanner for the NSCL scam. State-run Indian Renewable Energy Development Agency has filed its draft prospectus with market regulator SEBI to float an initial public offering. The proposed share sale comes at a time when the government is working on ramping up renewable energy generation capacity as part of a larger effort to increase clean energy portfolios. Well, that's all you need to know going into trade today. Do stay tuned to Bloomberg Quint Live. Up next is Indian Open, and it'll take you through Market Open. Thanks for watching. This is Bloomberg Quint.